our reaction to Q1's production deliveries. I mean, I was saying 440,000. You thought that was realistic too, and it turned out to 422 or 423 or something. Is that right? So they
422, yeah. So
they produced
that was
440, but they only delivered 423 or 222. Yeah.
and just to clarify, we thought 440 was possible from like a bull case scenario, but for the scenario we modeled last week, it was 430. So our base case was
Okay.
430. They came in at
Yeah.
422. So from my perspective, kind of mildly disappointing, but really right on track with what Troy
Slightly.
Teslake was saying.
Yeah.
Right on track with where Wall Street was, slightly higher
Yeah.
even than where Wall Street was. So I don't
Yeah.
know. I found it like it was okay. I don't think the stock necessarily
Yeah.
deserved to fall 6% yesterday or whatever it was, but
Yeah.
it seemed like modestly okay. Not a huge surprise either way. Did
Yeah.
you
I thought
have?
so. I mean, I thought that they deliver about what they produced. I thought they produced around 440 or 450, and they deliver 440. Just because, even though that was sort of my base case or what I really expected is likely. Because I just thought last quarter they had 50,000 more cars produced and delivered or something like. I think that's what it was, and so I thought that backlog would be caught up to some degree because it was sort of that lag before they cut prices in January. So
Mhm.
I'm a little worried about this backlog growing, if I have to be honest. Like at the current price level, I mean, this demand is infinite is hogwash to me. Like that demand is not infinite. At zero price, yes, the demand would be infinite, but the price is $40,000 for a new Model 3 or something like that. At 35,000 or $30,000, the print demand might be double at 30,000 versus 40,000. I don't know the exact metric, but it increases proportionally as the price goes down. And so that's just like the law of rule 10, like this 101 microeconomics, supply and demand, so and price elasticity and all that. So I'm a little concerned that this backlog is growing. I saw some incentives being offered at the end of last quarter to help try to motivate buyers to come take delivery before the end of the quarter. People were getting texts that saying like, "Hey, this might be your last chance to get the incentives for the IRA after March 31st. It won't be. So there's lots of, I think, levers they sort of pulled at the end of the quarter to try to maximize deliveries to occur. So
Mhm.
I'm a little concerned about them having to lower prices again. I think that it's not, I would put it 50-50 that this quarter or next quarter, they're going to lower prices again on the Model 3 and the Model Y by, maybe 10 to 15% suddenly, or maybe 20%. Elon seems to do these things in large cut. I don't think just because they want to ship the product that they can build more capacity of. They don't want to slow capacity growth
Right.
just because there's not enough buyers, So I think they want to maximize living up to the mission statement of Tesla, accelerate the world to, EV, sustainable transport. And if that comes at profit margins, so be it. They're accelerating the world by shipping more product, So I think that's the
Yeah.
mindset Elon's in. I just wish there was a different way they would go about doing it and just try some advertising. I was watching the NCAA championship game last night, and I don't watch a lot of sporting events lately, but I don't watch a lot of national TV. But I was watching it last night, trying to get my kids involved in it, and I saw like a bunch of car commercials for like GM and other things. I'm like, why can't Tesla just do like a commercial showing like how safe the car is? Like, I don't understand why they don't do that. Why they refuse to do that? Like how safe electric cars are compared to gas. Like how safe the Tesla car is. The efficiency of just charging at home every night. They could do it in 30 seconds and get so much across. And demand, I think if they did it a few times, demand would increase so much where they wouldn't have to ever lower prices again for years, maybe ever. Like for the Model 3 and Model, it would get them through till the next gen car is ramped up. That's what I think.
Yeah.
And they don't even want to test it. That's what I'm disappointed. I think it's like out of principle, like Elon's principle, like I don't want to ever have to advertise traditionally because I hate that other car companies have done it and trick people, and I don't want to participate. I just think he's I don't know. I'm just bummed about
Yeah.
that a little bit.
Well, we've been banging this drum for a long time, and on Investor Day, they're saying, "Oh, we've got like way more demand than we can handle now." So, like, I need to. What did Elon said something to the effect of like, "We're putting a definitive end to the demand question" or something like that. And it's like, would love to give him credit for that, but it seems like the data is once again kind of contradicting these statements from Tesla. So it is frustrating that they don't just try to dip your toe in like spend $50 million on it. Like we said, just try it out, see how it works. And if it is not a good use of capital, then for sure, like stop and kind of just do things the old way or cut prices. But
Yeah.
when we're in this environment of Elon is very much fearing a recession, it sounds like, and the interest rates are making cars, unaffordable, as he was saying. And at the same time, you're ramping up supply globally in a really significant way at a time when demand might be collapsing. And so then, like, the combination of those two things means your prices are going to get really hit hard, in order to sell, if you want to sell all the supply that you have. So
Yeah.
just as a way to, like, we're not saying you'd never cut prices, but there's probably some way you can, spend 50 million on advertising in order to avoid having to, give up a third of your gross margins or something like that. So,
Yeah.
I mean, that's really all we're saying.
Yeah, and I see Stu in the comments is saying Musk said that demand was 2 times production on the earnings call, and maybe for a short period that was the case. I mean, that's not probably not misleading or false. Maybe for like the
That
couple
was in
weeks
early
after,
January, like right after the
yeah,
cuts, though. So you got to keep that
yeah,
in
right after the
mind.
cuts, that's going to come back down over time, right? It's going to stabilize again at a certain level, which seems to be maybe below production capacity or where production capacity is growing to, especially, unless the macro economy comes out of recession quick and everyone has a lot of bonuses to spend on new cars or something like that. It doesn't seem like we're going in that direction anytime soon, though. So I
Yeah,
think you also have to think about it this way. Like, I wish Elon would think of the bigger, big picture here. Like the bigger, big picture, forget profit margins, forget advertise, forget all that. The big picture is Tesla is a behemoth of a country. It's a behemoth of a company. It's leading the world in EVs. Okay, it's leading the world. It's the face of the EV transition of the world. Right. It needs to take some responsibility that it's earned being that leader and set a good example. Okay, like why don't they just take that first step and show the world, like, hey, we can educate you in a traditional way you're used to being educated or tricked or advertised or whatever. We can do some of that too. We are the leader. Let us show you what EVs are about. Like it's their like if Tesla is so wildly profitable, let's educate the world a little better, right? And accelerate EVs, the world mindset to EVs a little better, instead of just like doing what they're doing. I just think it's sort of a responsibility Tesla has in the bigger picture to do some of that too. Like forget profit margin, forget all that. It's just like it's sort of
yeah.
irresponsible in one way to think about it in my mind.
They've had some really great like videos and like short clips on Twitter lately. So it seems like they've actually been doing a really good job of creating the content, that kind of explains some of this stuff to, people who are not in the Tesla bubble like you and I.
Yeah.
But it's not like they don't need to convince us anymore. It's like everybody that follows them on
Yeah.
Twitter, like
Yeah.
that's not the target audience that at this stage of their
Yeah.
growth they really need to be focusing on. It's
Yeah.
it's like the kind of early adopters, but not the earliest adopters. It's like the early followers or whatever that kind of cohort is called.
Yeah.
Like it's we're at a stage of really needing to scale up, and like it's possible that they really do have more demand, and this is really just kind of ending the delivery wave. But at least for like the Model S and the Model X, probably the Model X in particular, I mean, they delivered only like half of what they produced in the quarter. So to
Yeah.
me, that like there's almost no scenario where that makes sense. That oh, we had
Yeah.
enough demand, but we just decided to keep like 45 days of inventory on hand, because I like it just doesn't make sense. So
Yeah.
I think there's very clearly a demand issue, at least for the higher end products, and probably also for the Model 3 and to a lesser extent the Model Y.
Yeah. Yeah, I mean, I'm not as a long-term shareholder, I'm not worried. I don't want the perfect to be the enemy of good here. Tesla's still an incredible investment, but if they want to do better, they need to get on their they need to get on their horses about educating the general public in the world, not just the people in the
Yeah,
Tesla Twitterverse, And they can't rely exclusively on us in the Tesla Twitterverse to educate the rest of the world through grassroots efforts like we've been doing. That's not going to fly for. I mean, it's going to continue to happen, but it's just going to be slower, adoption than otherwise would be if Tesla you really took the lead here and said, okay, let's help educate the public in a much more conventional way that the public's used to being educated.
yeah, yeah, for sure.
So, all right. So the sentiment, I think, after the production Q, the trading sentiment, we're down a little bit today. The Nasdaq's down a third of a percent, it's almost flat. Tesla's down 1.5%. Not a huge sort of noise today. When Tesla's up or down 1 or 2%, I almost think of it as like a noise day, not really too meaningful. Like it's hard to interpret what's going on, especially when the Nasdaq's up or down less than 1% at the same time. So, but I do think that the deliveries being, where they were, not some big beat on consensus, it wasn't like 440,000, 450,000. I do think because deliveries were sort of it was like people were not really surprised either way, that I think there's a lot of air taken out of Tesla going into earnings because I think people are worried about profit margins. And so I think that's the main thing now is like, what are profit margins going to be? How low are they going to be? So I think there's some
Yeah.
negative sentiment on Tesla stock for the next 2 weeks until earnings. And I wouldn't be surprised to see us trade down, short term. I'm just speculating here, 160s, 170s, worst case, but I think 180s is most likely if the Nasdaq isn't moving too much up or down. That's my thought. And then earnings. The good news is I think earnings hopefully is somewhat solid and reinforces everyone like, hey, Tesla isn't sacrificing as much margins as we feared. They sacrifice some margins, but not as much as people are probably going to fear going into the earnings. And then the stock kind of rebounds. But that's sort of my thoughts of what we're doing short to medium term. That's if I had to guess. You have any? What do you think about that?
Yeah, I think that could be the case. There doesn't seem to be any kind of significant rally that could take place, other than if it's something macro related like CPI next week. Um, but so I updated our model that we walked through last week with the numbers, and then the other change that I made is I actually brought the services gross margin down because used car prices have been hit really hard. Which was something that we were actually expecting to happen in Q4, but it actually didn't. The services gross margin improved. So when I put all that together, I was coming up with 85 cents. I think we were at like 91 with our previous version. And the street right now is at like 86. So I'm pretty much right in line with Wall Street, which I don't think I've ever been in the history of, of me doing this.
Yeah.
Um, but I mean, I think if they come in there, like, I don't think the stock will necessarily move up or down. I'd have a hard time kind of imagining um, Tesla posting like 80 cents or something like that, which would really hammer the stock kind of post earnings. But if they surprise, I think there are very legitimate scenarios which could pan out where the earnings could be more like 90, 95 cents, and I think that could be the kind of trigger, especially if there's not a lot of if it's a good quality earnings beat.
hmm
Like the automotive gross margin X credits is better
hmm
than expected, which I think it could be because material costs have been really coming down quite a lot lately. The plants are going to be more highly utilized. So I think there's some kind of deflationary forces that are impacting Tesla's supply chain right now. I mean, energy prices is another big one. That was a huge factor for Giga Berlin.
Yeah.
And when we've really seen, natural gas and electricity prices come down. So it wouldn't surprise me if we do have like a modest beat, and I think that could rally the stock well into the 200s. But yeah, we'll see. I think I agree with your general range though.
Yeah. Yeah. So that's just 2 weeks from tomorrow, right? The earnings report, 2 weeks from tomorrow.
Jeez,
So that's coming
yeah.
up fast. Yeah. And what do we think gross margins are going to be? Automotive gross margins before the credits. What are we thinking it's going to be like in the range? What, like 16 to 20% or something like that? 16 to 22% or something like that? Is that the kind of range? Or if you had to,
Let me do that math here real quick.
like, what would that's the big thing I think that's going to be the key metric everyone's going to look at, I think, the most and focus on this earnings report is what are the
Yeah.
automotive gross margins, minus the regulatory credits.
So I just calculated 20.1% is kind of what we're expecting.
hmm
Um, so
And
it
it
wouldn't.
was as high as like 27 or 28% or 29% one point, wasn't it last year?
Yeah, like last year in probably Q1 and Q2. Maybe I can. I don't have the X credits, but yeah, I mean it
Yeah.
was. I think the actual reported gross margins were over 30% for maybe 1 or 2 quarters.
But that was
Um,
with the regulatory credits,
that
right?
was with the regulatory, but I think even if you back those out, it was like 28, 29, something like that.
Yeah. That was the highest it's gotten basically. So we're coming down to 20%. I think 20% is sort of like if you could beat 20%, that's going to be hopefully interpreted positively by the market. If it's between 18 to 20%, I feel like that's sort of expected. That's my thought process. Below 18%, maybe the market's like, it's not so good that Tesla's lower in prices so much, you know,
Yeah, yeah, and Zach Kirkhorn gave guidance that they'd be over 20% gross margins, not X credit, but just automotive gross
with the
margins.
credits. Yeah. Yeah.
So I think it wouldn't, and that was like the floor, and that was in direct relation to a question. So his own model may say 22 or 23%. We just don't know.
Yeah.
Um, but I don't know. I think I still don't think that the market really understands how massive these IRA credits are going to be.
Hmm.
I mean, that's like once the 100 gigawatts 4680 stationary storage cells are built out in Giga Nevada.
Yeah.
That's like we did the math at one point. I think it's something like $5 billion a year of credits just just from that one site,
Yeah.
which is crazy. No, it's 3.5 because it's 100 times or 4.5, so 4.5 billion. Um, just from that. But then you've also got the Giga Texas 4680, and then you've got any other stationary storage, and then you've
Yeah.
got the 10 kilowatt hours for the pack assembly that you get on even the non-US cells. So there's just like a huge amount of things that are going to be flowing to the bottom line. I think one of the criticisms with the why you do this X credits thing in the first place is because like the ZEV credits, everyone's like, oh, those are going to wind down over time because the OEMs are going to come in there and build their own EVs. And to some extent, you've definitely seen that happen. Certainly, if you look at credits on a per car basis, they've been walloped. Maybe it's like 10% of the value that they used to be.
Yeah. Yeah.
Um, but so like that's like a legitimate thing that the analysts are doing is stripping out those credits. But with the
Hmm.
IRA credits, like the exact opposite thing is going to happen. These are going to be like growing over time. They're going to stick around for at least a decade, um, and they're going to be really impactful for Tesla. So it's yeah, maybe there will be a focus on X credits this quarter, but I think we're going to see a pretty meaningful amount of IRA credits as well, and we may have some different breakout because some percentage of these credits are going to go on the energy side as well. So it'll be
Hmm.
interesting to see how those will be broken out. But I don't know. It's
Do you think
there.
it'll be meaningful for Q1 or it's more meaning? Well, it's obviously gonna be more meaningful as time goes on, but do you think it'll be
Mhm.
very significant for Q1 already, or it's gonna take a while for like things like the Mega Pack and 4680s to ramp
I,
up really?
I think I think we were estimating about 150 million in credits this quarter,
Mhm.
and that seems about right based on the guidance that Zach said, and we've
Yeah.
done some math too on okay, what's the current run rate of their 4680s, and how many so how would you estimate those, and then also on the stationary storage side, there's credits even on the solar side. There's credits. I mean, those will be really rounding error, but um, there's just like when you add it all up, it's probably on the low end. I'd say I'd be surprised if it was anything less than 100 million.
Yeah.
But like next year, it's probably going to be 2 billion, maybe more. I think
That's
for like the
insane.
full
Yeah.
fiscal
Well,
year.
yeah,
So
that's
then
gonna
you're
be
talking about 500 million per quarter, which
yeah.
is like that's really meaningful, and
It's
it's growing
meaningful.
over time.
I think it's meaningful, but it's I don't think it's gonna move the stock a whole lot. I mean, over time, maybe in a few years. I mean, we're talking about a stock that should be like let's say it'll be $1 trillion market cap company by then, and they're gonna be printing, 50 billion plus of revenue per quarter, like so an extra 500 million of profit. It's nice. It's a nice feather in the cap, but I think it's going to take a while for it to be like really meaningful to the stock price per se. Like I'm happy about it. I feel like it helps floor the stock. It helps create a floor for the
Yeah,
stock. But I don't think it's going to really in the order of magnitude, it needs an extra zero to be like, oh, well, that's going to move the stock up like that's going to be a big
yeah.
valuation
So
bump for the stock, in my
it's
mind.
interesting you say that because I see like Harry Chu in the comments saying IRA will not be meaningful, but like to think about just the Giga Nevada plant, like I just said, they're doing 100 gigawatt hours of stationary storage at
Yeah.
$45 per kilowatt hour. That's $4.5 billion of incremental revenue
Yeah.
or of incremental
Yeah.
earnings. That's over $1 of EPS, maybe in 2025 by the time that's all scaled
Yeah.
out.
Yeah.
That like how is $1 not meaningful? Now, grant at that time maybe they'll probably be earning a lot more, but
Yeah.
that's a meaningful percentage. That's like over
Yeah, it's
10%
meaningful.
of the
I see
overall net income.
Farzad I see Farzad the kind of good point. 150 million is material when you're doing 3 billion net income. That's plus 5% to the bottom line. Think about it this way. Like if I had a lemonade stand business and I'm working hard, making $3,000, a quarter, like profit. after all the work I'm doing, and then I got like some extra like tips that were an extra $150 per quarter. Yeah, that's nice. I'm happy about it, but it's not going to like meaningfully change my business or how people are going to like. I don't know. It's nice. It's gravy, but it's not. It's a little bit of gravy. It's a little bit of icing on the cake, but it's not the $3,000 is like that's the thing, you know, like the $150 tips is
Yeah.
like, it's so helpful. Okay, I'll take it. Yeah. But it's not going to like, in terms of the stock price, what I'm saying is like, I don't think it's
Yeah.
going to move the stock, you know,
So
the valuation of the stock significantly, you know?
that I agree with you to a point, but maybe what we should have been talking about all along is FSD V11. That's probably I think
Yes.
we
Yeah.
can all agree FSD is way more meaningful to the stock price
Way
than
more
the IRA.
meaningful. Way more meaning. That's like having the lemonade stand, and now instead of a person demanding, I have a robot doing it and handing out the lemonade automatically to everyone for me, so I don't need
Yeah.
a person. You know, that's a meaningful profit margin changer. And going to China, Elon going to China at the same time, they're going to be
Yep.
test driving this full self driving. Apparently, the reports that they're going to do like a mass full. I think there's a lot to this. I think Elon has a better relationship with the Chinese, you know, premier and the CCP and the, you know, Shanghai municipal government official. I think he has a much better relationship with them than he does the U.S. government, except for Texas, maybe Governor Abbott in Texas or something. You know, I feel like
Yeah.
Elon's relationship with China's government is way better, and I'm excited for him to take this trip. I think he's going to meet with some government officials. I think he's going to, you know, just improve that relationship there. Tesla China is a behemoth. If you're not like paying attention to Tesla China, like you're an irresponsible Tesla investor in my mind. Like you gotta like
Yeah.
people focus only on Tesla in US or maybe Europe, but Tesla China is like that's the elephant in the room, you know, like that's what's brought us to this valuation we're at is the Shanghai plant, the demand there, everything China, Tesla China. That's what we have to like really put a lot of apples into that basket to focus on that and follow people, find resources of quality information about Tesla China. If you want to be an informed and responsible Tesla investor, you need to know what's going on in Tesla China as much as possible. It's not easy, but you need to focus on that, right? I mean, I think this Tesla
Yeah.
China trip is going to be huge potentially for the relationship Tesla has in China.
Yeah, well, in they've said historically that the FSD take rate's like 1% in China. So, I mean, even if they only get to 5% or something like that, that's a really
Yeah.
meaningful improvement. Like that's still small, but like that would be a huge amount of incremental profit to Tesla. So this rumor that came out this morning that FSD is going to be released, FSD Beta is going to be released in China. I was not sure how credible that report was. Did you see that?
Yeah.
What did you
Yeah.
think about that? Like, bullish does that make you? Like, do you think Elon goes there and we have some sort of announcement, and there's some like approval for FSD beta or something like that?
I do. I think that's possible. I don't think it's like going to be like an official announcement. I think he's going to talk to my gut feeling is he's talking to, you know, the Chinese government officials high up. He hasn't been in China in years, and this is an opportunity for them to get to the table together and meet in person and have a nice discussion. And I think they're going to take it. You know, they recognize Elon. Look at his mom, who just went to China and had like enormous fanfare, enormous crowds. Like you see those
Yeah, that was
reports.
awesome.
I feel like that was like fake news or so. I feel like that was AI generated, but it wasn't. It was like real. There was like tens of thousands of people showing up to her book signings and stuff. Like it's crazy. And so I think Elon going to China, I mean, not his mom, Elon himself is going to China. And I think he's going to be meeting with the top government people in China. And he's going to talk about a variety of things from maybe SpaceX technology to a little bit of Twitter. So I don't know, but I think Tesla's the main thing. And I think the full self driving will be part of that discussion. And I think he's going to try to reassure them or something that, look, this is our technology. This is why we think we have the best. And I think we can do this safely and, you know, more massive scale and make China one of the leaders of this industry by moving this technology forward. And I think China is salivating to be the leaders of anything technologically, you know. So I think that China government officials want to be the leaders in manufacturing and just technology in general, you know, in any way they
Mhm.
can. And so it's sort of a competition for them to get ahead of the US in this. And I think this is going to be good. I think this is good. I think if the US government and official, you know, the regulatory agencies, all that, see that China's adopting full self-driving and they're off to a good start with it, they're going to have the pressure on them to like be more friendly about it and not be as kind of like, you know, as constrictive as they are now about it. So
Yeah.
This is good,
Yeah,
all good in my mind, all good.
that's really good too. And we also don't pay very much attention to Europe here as much as we probably should. But I had an interaction with Florian Minderop the other day, who's one of the co-founders of Mr. Green, the electric car company or the car
Yeah.
leasing company. And apparently, there's some new legislative update in the works that he is incredibly bullish about. And I think he said that he thinks that the rules are going to change in 2024, could lead to very serious uptick, in 2024 and in 2025, for sure, of full self driving. Because those, like the product, the full self driving product in those geographies is just like a neutered version of its like US counterpart. So
Mhm.
like it kind of makes sense if I'm living in Germany and I don't know what the price is in Germany, 8,000 euros or something like that, to get something that's like basically just the autopilot on city streets where it won't do any turns and like has very limited functionality. Like I probably wouldn't pay for it.
No.
So, but once you can unlock the FSD capabilities, and plus by that point it'll be, you know, on I don't know, version 13 or something like that. It's gonna be so much better than than it is right now. Like to me, it just seems like foolish to assume that the take rates won't increase. Now maybe it won't all be upfront purchases. Maybe it'll be subscription based more so, just because it's kind of hard to spend 15,000 all in one upfront payment. But when you're really looking out in like the medium term, I find it very hard to imagine that FSD take rates don't rise into something like mid-teens or even higher. But we haven't even modeled that in our in our base
No.
case.
Yeah. I mean, that's the exciting thing is once they get some massive like testing on the roads there in China, then instead of 1% take rate, anything's butter. Anything's like great for the Tesla margins, and
Oh,
that'll
my son loves
offset some of
butter.
these. Yeah, I saw that picture on Twitter. So I mean, that's sort of like what if I ever have bread, I now just have a little bit of bread and I douse like a ton of butter on it, like a big butter stick on a piece of tiny bread or
Salted
something.
butter.
So
Got to go
I like
salted.
salted, yeah, and I even pour extra salt on it sometimes, sea
Malted
salt,
salt. That's the way to go. Yeah.
yeah, yeah. So but I think the 1% take rate of Tesla FSD in China obviously is going to go up, whether it's 3%, 5%, or 15%. Like all of that above 1% is just like pure margins, and the existing fleet of like what do they have, like 1 million cars in China already on the ground, something like that, probably close to it, if not. And
Yeah.
so of that existing fleet, maybe 10% of those people also take on full self driving pretty quickly, and pay for it. So this is going to be great for margins for Tesla in the coming quarters that'll hopefully offset the further price increases we're anticipating they're going to have to do in the US to pick up more
Yeah.
demand in the US. Unfortunately, because they refuse to advertise. So, and educate the public. They just want to cut prices and leave
Yeah.
it to the grassroots efforts of us to educate the rest of the public. So, anyway, I'm not bitter on that, even though I sort of am. Let's,
Yeah. It's
yeah.
maybe one last thought on this too, because I
Yeah.
think it's so important and it's been a part of the thesis for so long, but it just hasn't panned out yet. So I think there's a tendency to just like ignore FSD, like Gary Black does, and I kind of get that. But like at some point, like I think they're getting to the point they're at wide release now in the US, where they
Hmm.
can actually do like maybe wait another 6 months or something, get it really safe, where somebody who's never driven FSD beta before can get in and not be like scared by it, and it'll work
Yeah.
for the most part, but they know how to take over. I think we're going to get to that point in the next 6 months or so, and whenever they do get to that point, I really fully expect them to give like a free trial to everybody who hasn't bought it, because well, why wouldn't you? That's just
Yeah.
like you've got a chance to upgrade 4 million cars or however many it is, and just like take your shot. And whenever they do that, even if it's like a low, like if only 5% upgrade, like that's still going to
Hmm.
be an absolutely massive amount of earnings that would flow through. So I think this really is a kind of bullish catalyst that's going to show up sometime in the medium term.